Want to shift gears now to our chart of the day. I don't need to tell you about the skyrocketing price of houses, but this chart suggests we could see some air taken out of the housing market. That's because borrowing costs have jumped big time lately. If you like 30-year fixed rates at 3%, you will love them at 4.4% and rising fast. All of this coming, obviously, as the Federal Reserve gets more serious about raising short-term borrowing costs to quell inflation. Higher borrowing costs will be felt not just here, but also in your credit card rates, auto loans, and more. All the while, Fed Chairman Jerome Powell saying earlier this week that king-sized interest rate hikes of 0.5% could be on the table for future meetings. And by the way, here's a photo of him in Senator Angus King's office, presumably telling a dog how serious he is on inflation. So at least there's that.
I was wondering what this photo is going to look like. Is it him going out to buy a house? No, it's a dog. But you know what's interesting, Brian? The mortgage rates, it's first of all, this was anticipated. We saw a huge rush from those potential home buyers who were trying to get out ahead of these rising rates. Now we're talking about, if we're talking about a 30-year fixed, it is, a level we haven't seen since 2019. And yet the inventory is still very low in some of these very hot markets. So we haven't seen a significant cool down yet. Obviously, these things take time, but I am curious to see if that intended impact of those rising rates will lead to a cool down, because it feels like we've been talking about it for some time. It just hasn't happened.
Yeah, and the other question here, too, is that, yes, in theory, higher borrowing costs should take some air out, but you can't avoid the cultural reasons for why people are buying houses or making moves. And what we know is that migration patterns are still very much volatile as people are still a bit uncertain about their return to work plans. And when you take a look at some big markets that have gotten a lot of attention over the last year or so, Austin, Jacksonville, Raleigh, are some of the big markets that have gotten the most net migration. That, according to some data over at the Census and Zonda. I didn't know so many people were moving to Jacksonville, but I guess if you were to see the bubble popping in terms of interest, maybe those are the cities. So I don't know. Have you been to any of those cities before?
I have not been to Jacksonville, but I think I was going to point out the other thing that we've heard so much from guests, which is that rents are rising too. So if you're a first-time home buyer, you're looking at those rates going up saying, okay, well, this means that things are going to be a little more expensive, but it still makes economic sense to go out and look for a home, potentially buy in, because with the rents rising, that mortgage that you're going to be paying is still going to be less for some people, not everybody, for some people, than the rent they're paying too. So it does feel like, especially first-time home buyers, they're kind of being squeezed from both sides. And that's why we're not necessarily seeing that expected cool down just yet.
Well, and then you got to remember that even if you do buy a house, though, if the math works out, it's still going to take a lot of time to renovate that house because you either can't find the furniture, or even if you're trying to do renovations, you can't find the appliances. I've heard anecdotes of people buying a house. They can't complete the work on the house because they still have a hole where their dishwasher is supposed to be because they can't find a dishwasher. So much of a crunch there, but we'll leave that chat there for right now. And again, you can take a look at Angus King's Instagram page if you want to see that photo of the Fed chairman petting a puppy.